guys. So, as you're probably very well aware, the Fed had a meeting this week and they cut rates. But that doesn't mean that they cut mortgage rates. And so I want to make sure that this is super crystal clear for everybody because I'm getting a ton of inquiries from real estate agents, prospective buyers, prospective refinance candidates, you name it, saying, hey, I saw rates dropped a bunch this week. Should we refinance? Should it be time to buy? Here's how this works. So the Fed absolutely cut rates this week. I want to make sure this is as crystal clear for you as humanly possible because I want you to be educated enough and in a way that helps you make the best financial decisions. When the Fed cuts rates, they are cutting short-term borrowing and spending. It's like they're lowering the speed limit on the money highway. It allows banks to borrow money more cheaply. And when that happens, sometimes being the operative word here, they will pass that along in the form of lower mortgage rates. However, mortgage rates don't always follow suit, and they don't always follow in the dramatic fashion that we want them to. So if we hear the Fed cut rate 0.5%, you might expect to see mortgage rates drop 0.5%, and that's just not the case. Additionally, most of the time, the market already knows, because people talk a lot, what the Fed is going to do, and they start pricing accordingly, which is why you saw mortgage rates start to improve ahead of the Fed meeting. Now, what's happened since then is the market has become very volatile. When the market becomes volatile, banks, in order to protect themselves, because that's money that they're loaning out and they're borrowing money from someone else in order to give it to you, the consumer, they might raise rates a little bit, which is what we saw during COVID for a little while, or they might go into a different payment coupon, which will cause rates to shift a little bit. But the bottom line is the Fed does not cut rates on mortgages. So another way for me to kind of create an analogy for you is that mortgage rates are like a kite tied to the Fed. Now, when the Fed is down here and we're shifting, we're going to see our kite move a little bit from one side to the other, but not in this big dramatic fashion because there's another factor at play here, the wind. Now, the wind in this scenario is going to be inflation, economy, investor demand, anything going on in the global economy, anything going on just globally, politically, whatever else is going on, those can also influence rates one way or another. And so that's why those two things are not 100% cohesive, tied together, however you want to describe that. So in short, the Fed cutting rates this week did make borrowing cheaper, which can help mortgage rates go down. It just isn't going to drop instantly. It's not going to drop as much, and it may not be by the same amount, which I realize is the same thing. So if it's a good time for you to buy, if it makes sense in your personal financial economy to buy a house this year, to refinance your current home, then you should do it. Don't worry about what the rates are because the rate becomes inconsequential at that point. The piece to focus on that I think just keeps getting lost because everybody focuses on the CNBC headlines of, hey, rates dropped however much. But the lowest rate is not always the best rate for you because if it's not a good time for you to buy right now, who cares what the rates are, right? You need to focus on, if you're refinancing, what kind of a payment savings am I looking at? Don't worry about the rate. We will find you the payment savings. If you want to save $250 a month, I'm going to show you how do we get there. If you're trying to buy a house this year and you want your monthly payment to not exceed $3,000, I will show you how to get there. You know what I never ask clients? What rate do you want? I want to know, what do you want your monthly payment to be? What do you want your total cash out of pocket to be? Or what do you want your payment savings to be? Because those are the three things that actually matter when we do budgeting. Nobody's pulling up your interest rate. So thank you for coming to my TED Talk this afternoon. I hope this is helpful. I'm not here to fearmonger. I'm here to educate you so that you can make the best decision for you. And if you're curious about what this Fed cuts and everything else means for you, let's talk numbers. Reach out to me anytime. I'm here to help. I want to make sure you understand this. Stop focusing on the headlines. Don't worry about what the interest rates are. Let's focus on your personal economy and how do we make it comfortable and financially advantageous for you. Have a great weekend. Bye.